good afternoon, and thank you to the organisers and sponsors for having me here. If we think about our lives, there are four core elements that, if you like, surround us. There's the governance and civil society infrastructure that we take for granted. There's healthcare, there's education, and then the factor that touches us all throughout our entire lives, and maybe is the most important, is finance, our money, our wealth, our income, how we navigate the world. And so I'm going to focus on that this afternoon and really help us think about what happens, or what could happen, to us as individuals as money starts to intersect with artificial general intelligence. And what could that mean for the current players in that field? I'm going to talk a little bit about the global context in which this is happening. I'll talk a bit about artificial general intelligence. I'm not going to go into depth in it because there's lots of other people going to talk about that. I'll then go on to talk about what this could mean for money, for who the players are in the new financial system, the kind of products we might have, how that might shape a future experience, the challenges that could arise, and then finally focus on what can we, as foresight players, as futurists, what role can we play in that transition and helping smooth it? And where I'd start is that if we take the global picture, the systems, the structures, the processes that have evolved over the last 80 years are really no longer fit for purpose. We have a much bigger population than we had in the 1940s and 50s. The internet, information technology, the flow of money, the types of products we have, the assets that back our systems, they are all under pressure. Our world is changing. And if we look at what we took for granted, we didn't have to wake up in the morning and say, I wonder if the World Trade Organization is still there. I wonder if the World Health Organization will continue tomorrow. We took these things for granted, but in the last 5 months, all of these pillars of permanence on which we then based our activity have all started to be eroded. And we don't know what's next. But we're in that world that feels incredibly complex, chaotic, fast changing, with an uncertain future. And in that environment, we know that there are already big winners and losers. More and more people today, wherever we look around the world, are feeling a loss of hope. They're feeling like they don't have access to the wealth creation mechanisms that others do. They have no potential for savings, they certainly can't invest in property, they can't get involved in shares, there's nothing they can play in. So their potential is already limited, and then their incomes in many countries are falling. And we're seeing that being reflected in the voting that's happening all around the world in elections. Populists who are saying, my lot is not very good, my future doesn't look very bright, I'm not happy with this, and the only way I can exercise my unhappiness is through the ballot box. By the way, can we get the time on the timer down here? I'm very happy to talk forever, but you probably want me to stop by about 7 o'clock. And at the same time, then we see report after report that tells us about the consolidation of wealth at the top. What the top 5% own, what the top 1% own. And we've just seen a really interesting tipping point. The peak in the US of the proportion of wealth owned by the top 1% was in the 1930s. We've just got back to that point again. But the really interesting thing about that group now is they largely don't believe that they're part of the system. They believe they sit outside the law, they believe that they can get off anything, they have access to the kind of financial products and opportunities that most of the population don't, they believe they have the level of influence on governments that they've never had before. And they really believe they sit outside the system. So we have this massive imbalance. We also have, if you like, a new financial architecture emerging. If we take the top 7 technology companies, globally they are worth about 20% of the entire global stock market. And they're part of what's emerging. Some people call it the decentralized state, some people call it the network state, where we're seeing a growing amount of power moving to these companies and them having more and more control over our lives, over our existences. And we're now seeing governments saying, we are going to negotiate on the behalf of these companies, particularly the US government, and basically saying, because they are so important to our revenues, we are going to make them a key part of any negotiation around the world. So we move these players from the status of being just another corporation to now being global entities that are considered too big to fail and are considered beyond normal rules and regulations. At the same time, we have what you might call a coalition of the codependent. Because those companies represent about 20% of the global stock market, if you have a pension, if you have an investment in a mutual fund, it is almost certain that you will be invested in these companies. The biggest financial institutions, the BlackRocks and all those players, are in these companies. So they are hugely invested in these companies succeeding, because if their share price falls, that is a massive whack to their overall capital value. And so they are putting pressure on other corporations to say, are you adopting AI fast enough? You need to do this because we need to keep the revenues coming in for the big tech companies in order to maintain their value. So we're seeing this fundamental shift that I don't think we've seen in history before, and these new kind of models of how the economy of the planet is being reshaped, particularly by the tech players. On the other end of the spectrum, we're seeing this super convergence of all these technologies around us as individuals, which are starting to open up all sorts of possibilities in terms of what can be delivered to us, but also what can be aggregated from us. Information about the way we think, about our bodily signals that start to create new value opportunities. Coming into this then, we see the potential of artificial intelligence, AGI, artificial superintelligence, and the potential that gives us for new ways of being. Now, others will define artificial general intelligence in different ways. What I would say is, over the next couple of years, we are going to see organisations claiming AGI capabilities. They won't be fully sentient, they won't be conscious, they won't be doing everything that we might claim, but they'll be doing enough to start to transform the way financial services works. In particular, what we're going to see is their capacity to absorb phenomenal amounts of data, more than we've ever thought of before, and from multiple sources, and be able to aggregate that in a way that we haven't done before, and enable us to access possibilities that we as humans would love, but the transaction costs of doing it were just too high. No player would have been willing to be an intermediary. But with fully automated AGI-enabled systems, all sorts of possibilities arise, from assembling data to reflecting on that data, making possible choices, executing decisions, a whole new possibility, and systems that in themselves are self-learning and can refine their behaviour over time. For the financial services market, this means we're at a choice point. Where we can either say, well, actually AI is going to be like most technology, where it just helps change the rules of the game a bit. And we've seen that with a lot of technologies. Or we could say, no, this is a massive transformational opportunity to redefine the game of what financial services is. And critically, to rebalance power. Up until now, the financial services industry has controlled everything. The products, distribution, pricing, the balance of rewards. But AGI starts to move data into the hands of us as individuals, but also AGI enables and will enable the capabilities to create entirely new products and services, many of which we haven't thought of yet, because AGI will think in different ways than us, quite possibly. So let's think about what this enables. Well, the first is we can start to reimagine money. and start to think about many, many alternative forms of currency. We've seen over the last decade or so the rise of cryptocurrencies, unregulated new models of exchange that are out there. We're going to see a proliferation enabled by platforms that allow almost anything to be a tradable asset. So many of us have loyalty points, it's very hard to spend them. You can't take your points from Lidl and you offer them to Finnair and say, can I pay for a flight? But we're moving into a world where we can start to do that because there's no transaction cost. I can start to trade time. Today, we have time banking systems where I can paint someone's house, they'll come and repair my car. But we can move to a model now that says, I will go and repair your house, you'll pay me in time tokens, I'll take those time tokens and take them to Lidl, and Lidl will allow me to pay for things that are valued in time tokens. They're not even going to convert them to euros. We're starting to see the potential emerge of having multiple different means of storing value, exchanging it. Our asset base also starts to become far more valuable. So if I have a 16th century collection of Delft pottery, again, I cannot walk up to a Ferrari dealership and say, here's my deposit. But what we're moving to is the emergence of platforms that will allow us to do that, that will allow us to trade the different assets we have for some sort of token, maybe cash, but maybe other things, that allow me to participate in a way that I haven't done before. I also have, maybe I have a food mixer. I can lend that to my neighbour and earn some sort of tokens back, and then those tokens become a tradable asset. All of this becomes possible because there's no human involved. We're creating platforms that are secure or more secure, run by AGI with almost zero transaction costs, and it starts to open up all sorts of new possibilities. We can also start to think about the bits of the environment that we own. So, for example, if you have a tree in your garden, that tree is absorbing carbon. At the same time, people are buying carbon offsets. They're buying bits of a forest somewhere to absorb carbon. They're paying for it. So each tree in your garden, the plants you have, suddenly become an asset from which you can earn value. And then finally, our health, our genetics. We can start to think about those as assets that we can use in totally different ways. So, for example, there's a lot of work going on life extension. All sorts of treatments to extend my life expectancy from 6 months to 30 years. Now, those are very expensive treatments today. But we move into a world where I can say, look, if you're going to extend my life expectancy by 10 years, well, I will give you my earnings for the last 3 years of my life, or that 10-year period, to pay for that treatment. And we can start to think about very different models of how we use what we have and how we participate in financial systems in a different way. We're also seeing the idea of, if you like, securitization of our lives. So we've seen this with artists. So, for example, Bruce Springsteen sold his entire collection for $500 million to a record label, and they then took the revenue from that for the rest of the future. But we could start to do that and say, actually, how I will pay for things, how I will assemble a store of value, is by securitizing my future income. So I want to go and do an MBA, that's going to cost a certain amount. For the people who are willing to fund that, I will give 2% of my future income until I retire, and 2% of any wealth I acquire in order to pay for that. We'll see all sorts of mechanisms where we'll start to securitize our future potential in order to pay for value today. And then perhaps the biggest game changer is this idea of tokenizing everything, turning everything we have into a digitally tradable asset. So imagine that you have a €100,000 home. We can turn that home into 10 million 1-cent tokens. When you buy that home, you might buy 40% of it with the cash you have. The bank that's lending you money might buy 30% of the tokens and give you a mortgage. And then the other 30% could be put up for anyone to purchase via an exchange. And then you would pay rent on the 60% you don't own. That would be shared between the bank and the people who bought tokens. We're starting to see this in all sorts of fields, like tokenization of industrial assets, tokenization of buildings, banks and financial services players experimenting with a few homes that they're trying the models with. But it starts to open up all sorts of possibilities, because I can make big purchases, and if I don't believe I've got the money, I can pay for it with some tokens in my home at the market value on the exchanges, or I can underwrite the transaction and say, look, if I don't have enough money, I'll sell those tokens to pay you. What that opens up then is the idea of the 5-cent economy. Today, if you go to Lidl and you make your purchases and it comes to €9.93, in some places they'll say, do you want to round that up to $10 and make it's €10 and make a 7-cent contribution to a charity? Well, now we have the possibility that not just with property, but with almost anything, equity, all sorts of assets, we have the opportunity to say, actually, I want you to round that up to €10 and put the €7 into a fund, whether it's property, equity, or whatever, because there's almost zero transaction costs in a world enabled by AGI. We also know that this shift, this alternative way of thinking about the future, about money, about assets, about how we transact, creates the potential for all sorts of new players to come into the game and all sorts of new products to be created. And it sort of means that almost anyone can get into this game. If I have a bit of cash, I can get into the lending game. If I'm a church, I'm a community, maybe I create my own local currency. Maybe I create the platform on which time is traded in my local community. All sorts of possibilities emerge, and almost everyone then can become a player in this. My 7 cents could be put into a lending pool that's then lent out to other people. So we're starting to give people, or we have the potential to give people access to growth in their personal finances in a way that they don't have today. This also opens up a very different model for how we assess risk. Today, if you want a loan, you want a mortgage, you go to a financial institution, they do some credit scoring, they assess your value, and then the balance is very heavily weighted in their favour. They charge you quite a high interest rate, which is way more than they're accessing the money from, whether it's through savings accounts or borrowing on the market, and they take the difference. Moving into a market where this is enabled by platforms that might be created by a church or by a local council, we can move to the point where I'm lending to any one of you, you're lending to me, and the credit scoring is done based on a whole portfolio of information based on all the activity we do, what we shop for, what kind of leisure activities we take place in, and what we put on social media, where we can create a richer and richer social profile that allows us to get more and more accurate in assessing your risk, which enables that person-to-person lending. It enables us to put money into a lending pool that then gets given out to multiple people. Again, zero transaction costs to enable this. It also opens up, we talked a lot about smart wallets over the last few years, but it really opens up the possibility for AI to run your personal finances through your wealth management wallet, where not only does it hold a store of value, but we can start to give it rules. We can start to give it instructions that say, okay, I want my portfolio to be split between top 100 companies. I want 40% in there. I want 10% in tokenized property exchanges. I'm willing to put 10% into crypto, and allocate different pieces, 5% of the VC fund, so on. And then authorize that wallet to make decisions on a continuous basis to buy and sell. And to learn over time and have conversations with us about the risk profile of the assets we're investing in. Are we willing to move to more risky assets? We've got some big financial activities coming up. Our kids are going to university. Maybe we need to move into more secure assets. But a learning, continuously adapting wallet that's starting to run our financial lives based on the rules we provide, based on our behaviours, based on its learning from the marketplace as well as what others are doing. And that also allows them to switch your money, the cash you have, on a continuous basis. So literally, minute by minute, to be looking for where you can find the best interest rate for that money with no switching costs and move it around. Absolutely brilliant for us. An absolute nightmare for financial institutions, because it will take quite a while for them to model and understand what this looks like. Big institutions already do that. They can move around millions of dollars on a daily basis multiple times. They're already doing it. It's still largely run by humans, but this is giving us all access in a transactional model that has almost zero cost to it. What it also will enable us to do as we move towards artificial intelligence is move towards a collective model of intelligence where our AIs are talking to each other and are harvesting the data from all of our transactional behaviour and saying, actually, this group of people spend 10% of their income on travel, on Finnish railways. And then to go back to Finnish railways and say, actually, we could use this money to go by bus, by car. Will you give us a discount? Retailers, car vendors, almost anyone. We can start to pool those transactions and have collective bargaining on behalf of a group of 50, 1,000, 1 million people. But it also moves us into the world where our AGI, or our AGIs working together in a collective intelligence model, can start to spot opportunities in the marketplace, can start to spot arbitrage opportunities, can start to see where products need to be created, can create products that you and I couldn't even imagine today, and enable us to participate in those. It may be a very short window. It may be something that's a 10-year asset, but seeing AGI step into that space of becoming the product creator. So what could this all look like if all these developments came together? How might they touch an everyday experience in our life? Well, I want you to imagine that it's July the 10th, 2028, 3 years from now. And you're sat at home and you're watching a film about Japan. And you're getting excited by what you're seeing. And we know you're getting excited because the cameras in the TV are monitoring your microfacial expressions. The sensors on your body are feeding data back to your AI about blood pressure, oxygen flow, heart rate. The sensors maybe in your sofa are also feeding information back. Your AI is compiling all this, comparing it with data from your past to say, actually, this pattern of signals corresponds to the pattern of signals we've seen in the past when you decided to book a holiday. So by the time the film finishes, your AI has compiled for you a 90-second video with the highlights of what you might like to see when you go to Japan. But not just a video. If you want, you can maybe have a multi-sensory experience. By this point, we would have seen most of the VR systems having some level of multi-sensory capability. So maybe that means smelling the flowers in the Japanese gardens that it recommends in Tokyo. Maybe it means tasting the food in the finer sushi restaurants. And maybe it means feeling the bed linen in the hotels it recommends to see if and the beds are comfortable enough for you. You talk to your AI, you have a conversation about what you want. Your AI highlights which providers of flights, accommodation, local transport, certain leisure activities. It says which of them meets your particular environmental goals. Which of them falls within the environmental footprint you're willing to have. The AI then agrees with you the business model for how you're going to pay for this. And I'll come back on that. Come the day of travel, you don't have any luggage because you've chosen to have a wardrobe on arrival. Part of reducing your environmental footprint is not taking your clothes, not taking any luggage. Basically, your AI talks to the hotel, says, these are the kind of things I want to wear, my owner wants to wear during the trip. And just in case you want some interesting accessories, there's a 3D printer there for you. On the day of travel, you're a really busy person, of course. So you leave it till the last minute, and then wait another 10 minutes before you leave. But it's okay, because you're going in a driverless car provided by the airport. In that driverless car, you have a full body scan as you would in security, passport and boarding pass checks are done, and you're still running late. So you authorise the car to make micro payments, to bid to the cars around you to get out of your way, so you can get to the airport. Ford have a patent for this. In flight, you choose to have a multimedia experience maybe, where you can learn more about the places you're going to visit, you can learn some basic language, and you can prepare yourself, and maybe even have a gently induced period of sleep. On arrival, you get to the minibar, and of course the AI has been at it again. Gone are the Toblerones, the cans of Fat Coke, and the vodkas, and they've been replaced by carrots, alfalfa juice, and all sorts of things that you really don't want, but your AI insists you have, because they match your physiology. As you travel around the island, you really want to have deeper conversations with the people you meet. So your AI does two-way instantaneous translation, so you can have proper conversations. You're buying various goods and services as you go around. And you have all sorts of mechanisms by which you can pay. You can pay with your loyalty points, you can pay with cash. You now have a portfolio of currencies, if you like, with which you can pay depending on what the vendor wants. But also anything you buy is picked up by the hotel drone, and the next time you see it is when you get back to Helsinki to your home. Now, one of the things you chose to do was to monetize your trip. Many of you have now been to multimedia experiences to experience a Van Gogh exhibition, or many other exhibitions to experience a concert in multimedia. Well, you've chosen to have parts of your experience captured. Not just the video, but the smell, the taste, the touch. And people around the world are making micropayments to share that experience. Your social network are buying in, your AI is using its capabilities to promote that. Because you've had a phenomenal experience as well, your multimedia experience goes viral. So you're starting to make real money out of this. On the way back, your AI takes you through the business model. Now, with that package of vendors, we have a group of different players. Some have just said, we just want hard cash money up front to pay for this trip. You might have been willing to put some cash money up, but there might be other players in the ecosystem who said, actually, we'll put the cash up, we'll share some of the risk, and the way you underwrite that is by putting some of your tokenized home up, if you don't earn enough money. The next thing you're doing as well is you're taking that money that you do earn, and your smart wallet is investing it, it's moving it around savings portfolios. And the vendors are choosing how much risk they want to have, how much they want in hard payment, and how much they're willing to accept in other forms of currency, and how much they're willing to share the risk and reward. The great thing for you and the vendor is with this business model, it doesn't stop when you get home, because people can keep it consuming your experience, and therefore there could be a continuous revenue stream. So with that potential, all sounds potentially exciting, potentially scary, potentially both. There are clearly challenges. There are all sorts of challenges. What if people are making up their time back and just saying, I don't have 6 hours, I have 100 hours, but there's no proof of that? What if they claim to have generated more assets in a way that we can't validate? So there's a huge issue around proof of value, validating that, finding exchanges that will trade these things for us. But perhaps the biggest issues are the willingness of the financial services community to move into something that offers such a threat to their current operating model, and their willingness to accept that the profits in this model might move in a different way, that the power might move from them to the consumer, and their influence on government. And then the other challenge is the extent to which we as citizens, as consumers, and governments are willing to play in this way. Our risk appetite, our understanding of what the technology can do, our understanding of the opportunities it might create. So there's a whole set of challenges there. I'm not going to go into all of them now, because again, we'll hear a lot of discussion about the challenges around AGI. So to finish, let's think about what we can do as foresight professionals, as futurists, as thinkers about the world that could be emerging in tomorrow's scenarios. Well, the first thing is, we see a phenomenal lack of understanding of what AI is, what its capabilities are, and what it could mean to move to AGI and artificial superintelligence. I'll give you one example. We're working with a big global bank. They have given 30,000 of their employees Copilot. They might as well have given them teacups. The majority of people who are using it, which is less than 10%, are using Copilot to write slightly better emails or to plan holidays. Personal applications. Even worse, when they first introduced it, the level of fear in the organisation meant that if you wrote an email using Copilot, you had to send that email to your boss to make sure they were okay with you sending that email. Your boss then had to send the email to compliance for them to check it. Now we laugh. Some of you are kind of laughing, some of you are going, yeah, we're like that. And they realised very quickly that they couldn't do that, and they shifted a bit. But the lack of understanding, the lack of training is really holding this back. So one of our most critical roles as players in this space, as people who are supposed to help our clients, our communities advance into this world, is that education. Really helping people understand why this technology is different, why it's not just a better Google search, and help people understand where it could evolve to, help them understand how to ignore the messages that say all entry-level jobs will disappear, or the messages that say there's nothing to worry about. Because both of those groups don't really have a full understanding of how the world works, how business works. And so helping people understand how to learn about this stuff, what to do in 15 minutes a day, and what we see is even with generative AI, it is the first technology on the planet that can teach us how to use it. You can put a prompt in that says, I have 15 minutes to invest a day. This is my level of current capability. I'm willing to invest 2 weeks to bring myself up to another level. Please create for me a course. Tell me what I'm going to learn each day. Give me the prompts to do that learning. Your microwave, your car, your new Hoover, none of them are going to teach you how to use them in the way that generative AI can. So we're moving into a space where we're going to have a different relationship with the technology. And getting people to understand that and the importance of getting up to speed quickly is critical if we want them to then understand what AGI could enable and the challenges it could create. On the back of that, yes, AGI could help reduce the wealth divide. It could give more people access. But there's also the potential that the wealthiest could use all these new tools to become even wealthier. So to start that debate about what this could do with the wealth divide, much earlier than people start building AGI applications, to start now in that conversation, equally to start that debate about what could this mean around ethics and values, what do we want, before we start building this next generation of technology and deploying it, what do we as a society want? And that's going to differ all around the world. It's going to differ from community to community, it's going to differ within countries. So there are two critical roles there around the debate. The next role is to help our clients in financial services think about what they offer and start to deconstruct it for the world we're moving into. And deconstruct it in terms of what is the offering, what are its features, and where are we really creating value? What is it we actually have to offer? Where is it that we deserve the premiums we charge today? To start to open up the conversations about why we might see market share eroded if we're a bank or a savings institution. With that in mind, then we can start the conversation and facilitate that discussion about future drivers, about possible scenarios, envisaging the wilder possibilities, and the ways in which those institutions could play. Because they're not going to disappear. They have assets, they have distribution, they have all sorts of possibilities that they can leverage to still play in this marketplace. And then there's a role to facilitate that transformational thinking that says, okay, having dreamed these ideas, having explored them, how do we start to transform what we do to play in that space? And how do we become players with a totally different financial model that enables some of these future possibilities? One of the things I'm seeing a lot of people do, futurists and future thinkers, is actually have some skin in the game now. Because they can see what's coming, because they can see the power of AGI, they're saying, let's not just be advisors. And with the startups, they may not have any money that they're willing to pay us as advisors to get involved with risk-sharing models, to get equity instead of fees, to put money into the things that we really think could be transformational, to have much more skin in the game. So I hope that's made some sense. We've explored the context in which this change is happening. We've explored some of the aspects of AGI that will enable this shift. We've talked about what that could mean in terms of money, players in the marketplace, products that could emerge. We talked about some of the challenges, and we've closed on what this could mean for you, where the opportunities could lie for you. And my final thought is that really, when we start to talk about the future in such radical ways, what we're really talking about is learning to dance differently. Most of us as individuals or organisations have a set of dance routines. Some of us have had those dance routines for 50 years, they look no different. Marketplace changes, we have one routine. A new competitor comes in, we have another routine. But now what we're seeing is that there are multiple forms of music playing at the same time. The music is changing at a faster and faster pace. You cannot write a business plan or a strategy for dancing. You have to get on the dance floor and experiment. You have to look pretty ugly, elbow people, tread on them. And the biggest mindset shift in this, particularly by the financial services players, is to recognise you can't wait for perfection. That 60% good enough might be what we can hope for in a world where the technology is changing so fast, the barriers to entry are dropping, and everyone could be a player. That is a massive shock for organisations that are taking forever even to do the most basic of applications. But the interesting thing is that the people we're buying for have had that for a business model for the last 30 years. Microsoft puts out software that's 50 to 60% complete. We then complete it for them. We find the bugs. We tell them what other functionality they should have. And then we do the training for them. We create the videos to teach people how to do every function possible. Banks and financial services players moving into this world are going to have to learn from the people who are eating lunch. The author Graham Greene says there comes a time in all our lives when we have to open the door and let the future in. I hope in the last 40 minutes I've just given you some thoughts, some food for thought about what might sit on the other side of that door in financial services when AGI comes to play. Thank you.
Thank you.